Good evening, traders. It's Mark here from the Day Trading Room. Time is 10 to 10 in the evening, London time, Thursday, the 7th of April, 2011. Um, Interesting few days for me. I'm still trying to upload the YouTube blog update from Monday and Tuesday. I don't know why it's not uploading. It's chugging along now. It says it's got 20 minutes remaining. It's been saying that for the last 15. So I don't know whether it's something I'm doing or what, but hopefully that'll be uploaded soon. That was Monday and Tuesday's trades, pretty mixed for me. A few stop outs, a few oil scalps, and a couple of good trades on Dow with all targets hit. So have a look at that if you haven't seen this one. Wednesday, I had an absolute nightmare with TradeStation. I updated, it asked me to update, so I updated. And so I've got an alert going off in my ear, excuse me. Um, and for some reason it just messed up everything. The layout, customization of all my um, lines and little alerts and hotkeys and all, just generally how you like your screens to be set up. It was a complete mess. Tried to restore it from the backup I do, wouldn't restore. Anyway, long story short, I had to reinstall the whole blimming thing, start again, and I was probably a couple of weeks, 3 or 4 weeks back on the restoration file. So, and I had a few changes to make to get up to the current layout that I like. So, yeah, done a few more layout changes again, only because just thought I'm starting from scratch. I may as well try something fresh and new. As you know, I like to keep stuff fresh and new. I sometimes change the colours on the odd thing. My primary screen pretty much stays the same. Might make the odd tweak now and then, but actually, just so you know, before I carry on, I had an email about that. One of you guys out there, traders out there, asked me, why do I change stuff, and do I often change stuff? And if you've watched all the videos, if you've been with me from the start, this is just an online blog, and this is a video version. From at the start of this new year, I started to make some changes to my trading plan. I've been trading the Dow all last year. Had a good year. Not the best year by far, but a good year nevertheless. And I decided to implement some changes, and I was going to trade the crude oil. I was going to look at the DAX in the mornings and just try and maximise my profits. Ended up dropping the DAX completely. Preferred just to come in the afternoon, London time, and focus on that. Crude oil been trading quite a lot, as you've been seeing. And I make some changes. I adapt with the market. That's what we've got to do. You can't be stubborn. I mean, obviously I've got setups and strategies that are long term and they work consistently, and I only have to make small little tweaks to them. I may sometimes not use them for a couple of weeks, like the noon push didn't work for a while, so you just back off that. It's the same with my charts. I've changed stuff around. I've found out that I want maybe a larger chart on my other screen of the Dow Cash, or a longer term chart of crude oil nearby, because I feel I need a bit more perception of where we are in the current market. You see, I've changed it from a 3 minute to a 5 minute, only because the volatility situation we've had, and I want to see the whole of yesterday's trade at a glance. So you've seen that change. I think I've changed the filter slightly on the time and sales. I think I had the ES there for a bit. I've now got that on the screen to the right. So I do change things around. I do change things around a little bit, and in answer to that email, as I said to the trader who emailed me, it's all about adapting. We have to find our own rhythm with the market so that we can trade and keep in pace with it, and with the flow with it, and take the profits that we want from the market. And that requires change. It requires little tweaks here and there. That might be taking off a few lines, changing a chart color, changing a time frame, changing from a bar to a cat. As long as you're not constantly doing it, and you're not doing it randomly. If you sort of do it going through a day straight, I will go through a day and I'll think, what, I found it a bit annoying having to open up another tab to see the 60 minute on the Dow, for an example. So I might then integrate that instead of an overnight chart or something. I might move it into one of my screens and integrate that, so that the next day I've got what I want to hand. It's all about improvement. It's a constant adjustment. Anyway, let's talk about today's trade. Yeah, came out we were plodding along actually quite early on, plodding along, not doing much, and then obviously news of this Japanese earthquake hit at 3:30, and I feel so much for these Japanese people at the moment. They're going through so much. Our hearts. I'm sure you'll join me in thinking about them, spending a minute thinking about them. Our hearts do go out to them, and I hope this tsunami alert that they've got now, as I speak, isn't as large as the last one. But I really do feel for them anyway. But unfortunately, as traders, well, not unfortunately, as traders, we've got a job to do. At the time, I didn't know what the news was. You've got to trade the price action. That's all you can do. I've traded through terrorist attacks on Twin Towers. I've traded through the Madrid bombings, the London bombings. I've traded through good news, bad news, crashes, flash crashes, credit. I've traded through everything, and at the end of the day, you can only trade the price action that's in front of you. You can't get caught up in lots of things. If you feel you want to donate a portion of your profits, if you profited from an event that other people have struggled with, or it's been an unpleasant event like a terrorist attack, then if you feel you need to donate a portion of your profits to a charity, then do that. Whatever you feel you need to do to keep that karma inside. So anyway, enough of that. Let's talk about the price action. Right, Dow was messing around. We had a good drive off the open, and something I did, which I don't normally do, is trade a couple of Nasdaq trades today. Only because I actually I didn't plan on doing it at all, but the Nasdaq had driven up so strongly. I was looking for the first pullback off the opening drive. Dow was loitering around. It only just filled the cash gap. Nasdaq, however, was motoring on. Just saw this nice little bull flag. Ticks had pulled back almost to zero. Got that push in volume. Great, in on that and taking a few off the table. So that was a nice little scalp to start off with. Then I was back onto Dow as usual, and this was an interesting little trade. Talk about this one for a second. I'm all over this in terms of long. We've pushed up, pushed back. It's about 50% of the move. Back to some support. It's all looking great. I'm all over this, looking for a push to new highs. What about yesterday's high? Great. But when something you expect to happen doesn't, you can think that a lot of people are going to be running for the door. And I know this was something completely different, but call the price action based on this up to here. Anything after that is obviously news driven. But when something happens, when something doesn't happen that you'd expect to happen, a lot of people are trapped in it, looking for the exit. So I was long, and I guess people were probably buying into this, expecting a new high. When by the third candle we didn't start to push up to at least this sort of point, really, you've got to start to question it, and it's all down to the price action again. It all comes down to looking at actually what's happening on the tape, looking at the order flow, looking at the volume. Chart says new high, doesn't it? It's pulled back, great, strong, especially on the Nasdaq, which is a completely different chart. It was really, really strong. Chart says new high. It's classical little thing. Ticks have been strong, haven't really gone below zero. Off we go. So I'm on board with that. Off we go. Price action told me different, so I took it out. 8 ticks profit. I thought, was it 7 ticks? It might have even been 6. Anyway, very small profit. All out and reversed because I saw that what expected to happen wasn't happening, and this should have been long gone. If this was strong, it should have been long gone. But it just started to fail, and I saw it fail and thought, there's a low risk opportunity here. There's the high, getting on this candle, risk is quantified, nice low risk. We could possibly probe down. I'm looking for a new low in the ticks. That's all I'm looking for. I'm not looking to hang around on this one. It's a little bit of a miniature setup, if you like. Got a new low in ticks, and happy to take it all out. Great little scalp. Then I started looking over. I was looking at the Nasdaq here, looking at the actual chart, trying to get a bit more of a feel for the action on it, and it's all kicked off. The news started to come through, and it all kicked off, and we just got this collapse in, and everything just went really. Oil didn't really go. I wouldn't expect it to go that much. It did come off a touch, but you'd expect at least $1 move on it. But obviously, different things affect that with the nuclear issue and what have you. Won't get into that. But yeah, just started to drive down, and I've got the Nasdaq up. I'm looking at the Nasdaq, and it's starting to kick off. I don't want to then change over to the Dow and start looking at the Dow. So I'm thinking, okay, just trade what you've got in front of you. You tuned into it. Let's just watch it. Took out that low, filled the gap, pulled back. Whatever market I'm in, I'm taking that. It's got all the hallmarks of a good trader. You can see this. I'll stretch this out a bit for you. I'm sorry if it's small, but it's on one of my smaller 19-inch monitors and the central to a 28 inches, so the screens are sometimes off. Anyway, I took that short. I'm looking for a push lower. Didn't manage it as well as I could. It came out quite a bit early on that. Again, I was still unsure what was going on. Thought it may still be nothing, but okay, good trade nevertheless. And took, I think it's 5 points, which is, what's that, 20 ticks. So yeah, happy with that anyway. And then I'm still watching it. We got a tail form here. I got a fantastic entry, 23.13. The low was 11.75, I think. I just saw us starting to, again, this is all about price action and tape. Chart says lower, of course, expecting to collapse, but buyers just came in and just bought aggressively. Big buying came in. I jumped on the bid. What a mistake that was. That was such a mistake. I sat on the bid. I got one contract. I couldn't believe it, and it just went off. Didn't want to chase it. So I'm there with one contract long at 13. The rest of it's sitting there. I have to cancel that. I don't want it coming back and getting filled again on that, because the trade's negated. You're either in on that little push or you're not. So, and what do I do with when I've only got a small portion of the position? Well, I just take out the first target, and the first target for me was 17. So that was all I got. Bit of a shame. I think I would have been in for a good push up, maybe at least this congestion level if I'd got the rest of it on, but I didn't. And that's what happens if you use limits. You sacrifice the chance of a better price for the opportunity of a better price, should I say, with the certainty of getting your whole lot on. But anyway, that's the way it is. I'm not very familiar with the Nasdaq, so probably just should have hit the market. I should have hit the market anyway with a volatile thing like that. Didn't know what I was playing at. So that was that. Took a couple of then shorts on the Dow. This looked like it was going to roll over. It looked great. Actually ended up taking a small stop on this. Not a lot. This looked great for a push up. Push, but I expected it to push back to at least this sort of level, and we didn't get it. We didn't get it. So, what can you do? You just got to come out. It doesn't work as you wanted to. Just get out of the position. I've got an oil alert going off in my ear. What are we now? 1:10:37. Okay, very quick. Let's move on. Let's move along quickly here. Yeah, trying to engage what was happening. Should have taken double bottom really. What I did, I was messing around again. Got away with it. Just to get away with it. I don't know why this is marked on here. I think this is from the Dow thing, but delete it. I didn't take a short there. Yeah, the Dow double bottoms, you see, and it was looking like it was going to push through the low. Nasdaq was finding some support here at this 23.16.5 level. We pushed up, and I thought, you know what, they're just sucking people into this. It's going to plough through the lows again. So took a short there at 20 and a bit, pushed down, and ended up taking most of it out there. I actually scaled out quite a lot into that. It's all in one candle, so I only put one arrow there. But I took the first batch out as we came down to that previous support, thinking we're going to go lower. Started to pop back up. Dow then started double bottom. I'm looking at the Dow. That's my primary market, obviously, and it didn't happen. So it was. I think it was an average of 3 points on the Nasdaq, which obviously nothing to be sniffed at still. This was a frustrating trade. Well, okay, listen, emotions as well. Someone's emailed me and asked me about that as well, about psychology, and I know I haven't talked about it much because I feel I won't do it justice. I could talk about it for a whole day, psychology and emotions in trading. So, I don't. I just talk about the trade entries, but it is a key point, and you as a human at the end of the day, and you're going to get frustrated. You're going to feel all the emotions that that a human feels. That's the way we are built. You can't suppress them. You just got to learn to control them and work with them rather against them, and learn when they are controlling you rather than you controlling them. Anyway, I don't want to, as I say, I could go on for ages about those. This looked like a great setup to me. I was so pleased when I saw this. I thought, oh, this is amazing. Um, Lovely push up without a pullback, new high in the ticks, right in my window of opportunity. Let me bring you in the Dow cash chart. You've seen this before. Um, Look at that, 5 o'clock, right yesterday's low. Oh, I just thought this was brilliant, brilliant. And a bit of deja vu. If you've looked at Tuesday's video, you see I took a similar sort of setup, and it was okay. It yielded quite a nice little profit. It was the high of that swing. I just thought it was again, all over again. Nice high and ticks. Everything's on my side. A little pulse in volume, right at that congestion. Off we go. Thinking. Took a nice big fat short there. Rolled over. Managed to get 10 ticks on that. Rule just about on half. We pushed up again. Re-added the half. Thinking still happy to take it. New high and ticks, no problem at all. Not really concerned about it. One more little shove. Volume not as high. This is going to roll over. It's going to give me at least 20 ticks, I'm thinking. And you know what? I got punished for being cocky on this trade. I thought that this was a gift of a trade. It looked great, and it just went against me. I had a 6 tick stop from the last high of that swing, which was 40, so it's 46. I didn't get stopped on that. I was thinking, oh, didn't get stopped on that, but then I finally got stopped on this candle here. So yeah, losing trade that. Took half off, as I say, but re-added the half, and then losing 6 on that, and then whatever it was on that. But it serves me right a bit, and actually, really, when it hadn't rolled over immediately, I should have ditched it, or at least covered some of the risk, because 110.40 on oil at the moment. Sorry, I'm just getting alerts in my ear here. When it doesn't do it, you've just got to think, hang on, it's going to do the opposite. So I was one of the ones on the opposite side of that. But never mind, it wasn't a major loss, but I did feel a bit of frustration in that trade, I have to say. So that was it on the indices. So I threw a couple of Nasdaq trades into there, not like me, but just saw the strength on that in the morning, and that was where the first one came from, and then I was focused on it as the news hit, and didn't want to switch over. So anyway, let's run over quickly to oil. Oil was a bit of a funny one today. I reduced the size down on it. It's because it's acting very oddly. I was buying it every time. I had 3 buys on this, and every time I'm looking for that real big pop, the real big flush that just gets you that real quick profit, and if you read it right, it's nice. So anyway, I didn't get involved in it all throughout the day. We're probing highs, it was chopping around, then we broke out. Off we go, broke out, nice volume spike, broke out. There was the congestion level. Let's get the drawing pan out now. There was the congestion level, broke out, pulled back. Had to watch very close on the tape. Difficult read that was. It was a difficult read, but managed to get it. Pushed up. I'm looking for a break of 110. I won't lie to you, that's exactly what I was looking for. That's exactly what the premise of the setup was. We pushed up, failed, and started to trickle down. Took some off the table there, and then was waiting for a break of 110. And then this is what happened now. This is fun and games. I stuck a limit order in for my last contract at 110.20, which is there. Hoping for a break of 110, thinking it's going to pop up, ping me, and that's all I want. I just want that flush. I want those stops. I know there are stops at 110. I also know there's a lot of sellers loitering around here. It's not one-way traffic like we've had recently, so it's not a clear-cut setup. So I'm not in too heavy on this, but I'm in a reasonable level back down here. I've taken some off the table. It's a free trade now. I can afford to look for that 50-cent trade. So I had it at 120, and I was waiting patiently, sitting there watching it. It kept dummying and pulling back and dummying and then pop, off it went, straight up, went to 110.16 and came straight back down. Now I wouldn't have minded if it had gone to 110.16, rock back, say 6 or 7 ticks. That's fine, that's expected. Stop orders push it up, then you get the secondary buyers coming in and drive it up. But it came straight back down, and more concerningly, it came straight back down to the level it was holding at before the pop, which was the 109.93 level on the tape. It was thick as anything. If I scroll it down here, look at the cluster here. I know we've done a lot more trade since, but there was a lot of you can actually see reasonable here, a lot of good trade going on around here, which was this congestion area, and it popped straight back down to here, and I thought, can't believe it, I've missed my opportunity, I've missed it by 4 ticks, I'm gonna have to just hit the market here and get out. So I ended up taking it out at 93, which was disappointing. Missing that by 4 ticks would have been so sweet to have just caught that little pop. And of course it did pop up, but I couldn't ignore the price action. We'd had the big flush in volume, we had a tail, and if you just see this, where is it? Let's just try and get this so you can picture what I see at the time. The time I see that, I see a good tail there. I see 110, my key level. I see a good high in volume. It looks like it's not going to go again. So I have to come out. I have to be strict to my price action rules and everything, and came out. So what it was, missed out on a real nice juicy trade there. But nevertheless, it was a good trade. I shouldn't complain. Pushed it again. Tried to look again for the pop. Read it okay. Jumped on here. Didn't really give him much. 10 ticks or so. It's a dangerous game. I got away with it. And here at the close, took a long at the close. It just lifted. I was waiting for this level to lift here. It was the 110, 14, 15, something like that. Just lifted, joined it. Really, really tight stop on this. Just wanted to see if we'd... actually, no, it wasn't 110, 14. It was 110, 10. I just front run it. I remember exactly what it was. 110, 10. Just front run it slightly. Especially after seeing it come down and then push back up again. Thought it was worth a go. I can have a stop, 10 tick stop on it. I'm looking for a good push up, and actually gave me 20 ticks. I came out at 30. I was looking maybe for a push of the high, didn't get it. But hey, some great stuff in there. I got a little bit lucky in some cases, but I can't complain. So that's it, guys. Hope you've enjoyed this video. As always, send me your emails, send me your comments, send me questions. Happy to answer them. And we'll back with another video probably over the weekend. Hopefully this it says it's uploaded now. The Monday and Tuesday video is uploaded, so you can look at that, and then hopefully this isn't too long. I'm going to try and keep these videos a little bit shorter. I know 20 minutes is a long time to listen to me, so from now on I'll try and keep these short. But anyway, good trading, guys. Manage your risk, and I'm back with another video the weekend. See you soon.